Risk disclaimer: please understand that this call is for community members. All participants choose to attend at their own discretion. Please understand that all trades, concepts, images, and discussion presented are not to be taken as financial advice. And also understand that you shouldn't trade with the money you cannot afford to lose. It's Risk Management 101. Now, in a short while, we'll be using this template. Once again, we keep working on it to make it as simple as possible. Okay, so we trade the initial momentum of the market. So we want to see what is happening in real time. And that is why we decided to use a price action system where we can see the naked chart and see what is happening. So yours might look like this. It might also look like this. Now, we trade based on our rules. We have what we call the blue zone. The blue zone is right here, this daily pivot point. When the market is above it, we look for opportunity to buy. When the market is below it, we look for opportunity to sell. And when the market is distant from it, we look for opportunity to trade a pullback. So, just for us to know that. Also, we use our MFI as confirmation to confirm the direction of what we are trying to do. Okay, the MFI shows us where the smart money is flowing into or flowing out from. So then stop loss, since most of the time we trade on 1 minute, sometimes we use mental stop loss, or if you want to use your own stop loss, we either use the Phoenix or use the swing low or swing high, as the case may be. Our trading rule for the sell, as you can see in this case now, the market cuts through this and the rest also is a profit. I'm just trying to go through the slide so that we can review the market and also, if possible, look over what we did yesterday. Now, we trade what is called a bounce. Like in this case, the market comes, touch the blue zone and bounce from there. So if you happen to pick that, you could trade that particular bounce. Then we also have what we call the exponential moving average crossover. So in a situation whereby the market is distant from the blue zone, and you are contemplating, okay, where can I enter, where can I jump into the market? Now this crossover helps us to know when to enter. So in this case, as you can see, in this situation right here, there's a crossover there, and this candle gives us an entry. So if you are putting your stop loss, it can come below here or it can come below here. And as you can see, the rest also is profit. Now, when you look at it, you discover that it also rhymes with our MFI, because MFI also is above 50 right there. So this is an example of a sell. As you can see right there, there's a crossover and the rest also is a profit. We trade what is called a breakout. Sometimes also the market is above the blue zone. So when that happens, and we have this FX sniper box. So once we have that breakout, we can also trade it. Now we are being cautious to, of this Phoenix. Anytime we have a Phoenix staring at us, is just warning us. We don't want to be buying, okay, against resistance, and we don't want to be selling against support. So always remember that we don't want to be buying against resistance. So let's say this is a resistance here. For instance, this blue zone is a resistance on its own. Assuming you have we're talking about crossover now. So let's assume we have a crossover right here, and we are looking at, even let's assume there's no Phoenix, but we are looking at this daily pivot right here, very staring at us. You don't want to be buying against that, because that really looks, that serves a resistance. You want that to break before you join the market. Now, we take our money and risk management so seriously. For prop challenge, personally, I try to risk like 1%. For funded accounts, if with prop firms, I risk between 0.2 to 0.5 I've seen a lot of video that will tell you you can risk 2%, you can risk 1%. Well, it depends on you and your risk appetite and the equity you have on that account. For a personal account, well, the liberty is yours. Now, please understand that there is no 100% only grade system. Today could be a losing day and it could be a winning day. What we try to do is to have more wins than loss, and I believe we have been working towards that. Out of 5 days, 5 trading days, most of the weeks I believe we do have about 3 or 4 winning days out of 5, which is good. And I can see also the results from our members, having payouts, cash out, and that is really the motive of setting this up. It's a lot of work, but at the same time we are enjoying it. So now if we trade on 5 minutes, understand that we might not pick a trade within the 30 minutes that we have together, but at least we will do the analysis together. And we also try not to attach an emotion with the outcome of any trade, and we treat every trade uniquely. That you won the last trade does not mean that you go and win the next one. So we treat every trade uniquely. Now, having said that, welcome to 30 Minutes Traders. Let's quickly take a look at the market. This morning, I believe there has been some news. There's been some news. Where are you? Tuesday, London session has been so busy, as you can see, starting from 1 a.m. 0, as you can see, 2:30, 3 a.m., 3:30, and that has caused gold actually to pull back. It has been up but pull back. Now, if you cut that, congratulations. I was able to catch some pips also with that, which I share in the group. That was really an awesome trade. Now, this morning we are expecting a news PMI by 8:45. So when the market opens by 8:30, we might not really see much movement. Now, let's quickly take a look at the trade of yesterday. If you remember very well, we did this analysis yesterday. I told us that, let me zoom out here. I told us that we are at these key levels right here, that I was expecting the market to, pull back. Now, it tried to trick us, and that is what the market does. That's what the big boys do. If you don't exercise patience, sometimes you will jump. Because what happened with this candle, you can see it breaks through this area yesterday. And I remember I was having that conversation also with a great man, because he was referring me to that daily. And I say even on daily, I could still see the same thing here. So it went back, and if you remember, I placed 3 positions, and the rest was a story. After the closing group, as you can see, it pulled back up. So that analysis is still valid. I still expect up movement. As you can see right there, we have this trend line. So I'm still expecting this to hopefully pull to that trend line. If we also look very well, we can see that even though the trend is down, because we can see this is a higher low right there, come here, consolidate, break out, come back right there. I couldn't really break through right there, consolidate again, form this lower low right there. Now, at this particular place, I can't call it a change of character yet. Now it comes down here, it's still fighting it. So this place is very key. Also, this is very key. If it takes out this high right here, okay, if it takes out this place, because this high is higher than this, so if you can take out this, then we'll be looking for all. But for now, anything can still happen. And if you look also this place, this looks like a rectangle also. This looks like a rectangle, which, yeah, it looks like a rectangle right there, which could break out also upward. But then we try not to predict, we react to whatever that happens. So we have 1 minute. Let's go to the market and let's do it. Now 15 minutes, this is what I can see. On 15 minutes, this is our daily pivot right there. It's far from it. 1 minute, the market is open. Okay, so pulling up. Now I'm going to, let me see. Now there's this demand zone right here. Can come back since I've missed that initial push. I'm just going to wait and see if it will come back. If it doesn't, it's okay. It's okay to miss a trade than to lose a trade. It can come back to sweep some.
So what are we following? What is the?
This is Nasdaq. BJ, how are you doing?
Good morning, everybody. I'm good. Are we trading to the daily pivot, or are we trading against
the daily pivot? Is behind us.
Oh, okay.
Yeah, we've missed that push. So we just go wait and see. We've missed that push. Let's wait and see if it's going to pull back. Remember the analysis, you see right there is like it's pulling back there. So on 1 minute we've missed that push, but let's wait and see if that supply block will push it back downward little. Okay, so now if you come back to this place, I'm going to buy it right here. Let's see. If you come back to this 14672 and give us a bullish setup, then I will join it. You see, that is why you don't need to chase. When you chased it, this is what happened. Now, okay, good. So right now I'm going to buy, even though I don't see any Phoenix. Normally I would love to see a Phoenix behind me, but because I see that buy arrow twice, and remember, if it continues downward, it's okay. I will add to my position. Always apply good money management and risk management. This account I can risk up to $500, so this is still like $1, $10, whatever. So now, if you understand the smart money concept, you will know why this pullback right here is called liquidity grab or sweep. It's just to come and sweep on, those retail traders that put a buy and put their stop losses. That's why I don't use stop loss when I'm scalping market like this. It can just come and sweep it. But if it breaks this area, then it might be on its way down. But let's see. So I'm going to go to 5 minutes. See that rejection there. So let's see. On 5 minutes, it looks like it's pulling downward. 15 minutes. Stay valid. Now if it comes down on 15 minutes, this will be another area. BJ was asking our daily pivot. This is our blue zone. See right there? Do you see there?
Yes.
So okay, it's right there.
No, we're buying here. Okay.
So that will be another place to put a buy if you are not in any buy right now, right here. And it's also, as you can see, it has a very confluence with that demand block right there. But I'm trading on 1 minute. So on 1 minute right now, as you can see right there. Now there is a Phoenix right here. Do you see that? Now we have a free ride. Let's see. Okay, it should be able to break that block now because it touched it, it came back. and it form another block right here. Let's see. It should be able to break that. Good. That's what I was expecting. Now, this would be a place. Now, it might respect this because this one right here is the supply block of higher time frame. So I'm going to exit that my buy. I just exit my buy position, as you can see right there. If it respects this, let's go back to that our analysis. See, we still have a little push to go, but then because of this area right here, so you see, so if it breaks this area, then it will now be on its way up. Once you learn how to read this chart and you learn how to just follow this, what the big boys are doing, your problem will be less. I'm learning not to be too greedy with the market. Just okay, small profit, add it, and keep moving. You see, right there. Because when remember that, I mean, Forex trading 101, what we have always said, you buy low, you sell high. So at this particular price, please right now, that price, the price is at a premium price. So that is why you see the sellers push it back down to get what we call the premium, I mean discount price. So at discount price now, buyers are buying. You see that this is a demand right here. This is a demand block. Tap that and it's going back up. Now, if it takes out this Phoenix, I'm expecting it to break this block. Then I can join buy, and at this time now it will not be a swing trading because we have scalped it within the last 6 minutes. Okay, anyone of any other position, any trade, Euro, USD, gold,
news?
Start?
Do we have any news today?
Yeah, there's going to be news by 8:45.
8:45. Oh, okay. So I think that's why the market is still reacting this way.
There's going to be news by 8:45. Can you guys
see my video? Can you see me? Can you even see me?
Let me see. Hold on. No, I can see you in the dark, but you shouldn't be in the dark.
Yeah, I mean, I don't know what's going on. Maybe it should be my camera. I think I need to fix.
It's village people. They don't want us to see you, but it's a lie. We will see you. We will see you. Okay, now it's getting ready to break that. If it breaks that, but then there's a weak eye right here. Now let's come to this 15 minutes. See right there. Right there is right there. If you can break this block, then it will be on its way over here, but it's still fighting it. Now we have to wait for that news. Since we have traded the last 6-7 minutes, we have to wait for that news of 8:45. Yeah, your distance is still, your video is still not shown. It might be your camera.
Yeah, I think maybe it's my car. I just got this laptop anyway, so
too much money
to work on it.
Too much money.
My trading office, like I want to be like you. You see, the way I get it, when I you see the way you say it out.
Well, you did it. You need it to. Yeah. We say it did shine in Latin money, lole.
Yeah, we got to invest back to the business.
That's it.
Yeah.
Okay, so this is where we are, but I'm thinking it's still going to pull it grow. If you are a swing trader, you can just put a buy, but then either your stop loss is way down here, or you don't even use stop loss at all because of the news. This is 15 minutes. As you can see, what is happening right there is like it's consolidating. Anything can happen. At this moment, anything can happen. This is 15 minutes right here. See, anything can happen. We will come here, right there. Then if you pick this, let's see what so if you have missed the fast scalping we did, you see right there. Okay, I know it's supposed to respect this. Even if it breaks it, it's still coming back. It's not time to jump into that buy now. If you have exited your buy like I did, if you have exited your buy position, this is not a time to buy right there. You don't want to be buying at premium price. You want it to come back here. This will be another place to buy. That will be 14,680. And remember, missing a trade also is a trade. Missing a trade is a trade. Okay, see that move? There's this other block right here. So that's where I'll be waiting. I don't want to be buying in that place. Number one, there's a change of character right here. So you can see, I don't know if you guys can see that line right there. So it's telling us that, okay, the down movement is over, but then we have to wait. It's definitely going to come back to this place. And if it doesn't, it's part of the trading. Anybody trading gold?
No good for now.
Euro USD.
What's going on in gold?
Oh, gold was on a sell during London session.
Yeah.
It was on a sell during London session. Make a quick.
Just trying to do some correction.
Yeah, I made quick 13K on one account there.
And what was it called? What Bitcoin too is flying. Who trade Bitcoin though?
I don't even trade Bitcoin. Bitcoin. I know some people still trade that, but I don't even trade Bitcoin. I've never even for a time traded cryptos.
Like on them, I think the spread is
yeah, it's too wide.
Yeah.
I think I share this thing with us on the group. Remain 3 minutes. So let's see if I can still. Yeah, this was what I shared in the group. Here, I sold gold here. I sold gold here. Actually, once I see this right, I didn't even wait for this arrow. I sold it as soon as this red candle takes out this green one, and I follow it down.
Wow.
That was a cool one.
That was like easy peasy.
What time frame is that? That's 5 minutes
15,
or 1 minute?
15 minutes.
Okay.
It was on 15 minutes. So 15 minutes. Let me see, where's my chat? No, not this one. Where are you? Okay. It's a lot of work when you're trading more than one account. So you just have to organize yourself. Okay, so we have another block right there, but that one is a minor. That one is a minor one. Now I see Phoenix 844. This is a Phoenix. This is a red Phoenix. So let's get ready. Red. So it respects that right there. So like the way you can do this, if you are the kind of person that like using stop loss to your trade, okay, good. Come on, awesome. Come down here, come here, come to this place. Here. So 845. See, that other block is a minor one. Now, some will place a buy there and put stop loss. After that, now boom, it has grabbed swept the liquidity right there. So that's why you have to understand, this is what the big guys, this is what they do. This is what they do to, I will say, my analysis was right. It's not that maybe your analysis was wrong, but then you need to understand this money game right here. Okay. So now let's see what is happening on 15 minutes. On 15 minutes, it can come to this block. It can come to this block, but I don't want to sell it. I'm just waiting to see. Okay, I'm going to jump in there. So I'm buying here. If it breaks it, continue. This will be another place that I will join the buy. I put a buy there. I'm not using stop loss, guys, but remember my lot size also is not heavy. If you leave that and come here, this will be a place for me to add another position. That's the essence of having these other blocks there. It's just telling you where the buyers are clean and where the sellers are clean. For right now, I see more buyers lining up to buy Nasdaq. Okay, it takes out that, boom. You see, I put my stop loss 0 USD here. It takes it up right there. This is it. It takes it out right there, and I put this. I sold it from there and right there and right here. It takes it out. So once you just understand, once you understand the concept, it's easy. Does that mean that you will not be having losing trades? No, but then at least you know that you know what you're doing. Like right now, it's fighting it, and I'm not willing to close this. If it comes back down, this is where I will put another position. And you can do that. You can stack your position at least up to 3 positions if you don't use heavy stop loss, heavy lot size. But imagine if instead of 0.02, now if I have put 2.0, I won't have that opportunity to add to my position. So with that, my strategy has to be different. I have to wait for a good and proper setup where I can use a stop loss. As okay, this is where I put my stop loss. If let's assume that I'm trading just only one position, I will be trading on 15 minutes. I will not be buying where I bought. I will possibly be waiting for the trade, for the market to come to this block right here, because this particular place is the other block before this up move. So one way or the other, the market can still find itself to this place right here, one way or the other. Okay. Well, so if you put that line that I was talking about, you see, right, it's going to be here, right here. So this will be another place to set a buy limit order right there.
So the big green box there, does it mean not that one, the lower one? Does it mean that more buyers are waiting there?
Yeah, this you see, there is what is called the major. you have major order block, and you have minor order block. It doesn't really mean that many buyers are here, but this particular block right here started this move. You see this up move. So like in this particular place right here, there's this fair value gap between here and this. One way or the other, this market will still find its way to come back, to come and fill all this. You see, it's like let me use Nigerian analogy to explain what the market does. This is a boss. This particular boss is going to point. This is the destination. But when it gets to all this bus stop, it's not filled up yet. Are you following my analogy now? It's not filled up yet. So one way or the other, you will see this bus will come back. I don't know, maybe you have experienced that in Africa. It will come back again and start again calling, or and start picking passengers again. Airplanes also do that. When they leave one airport, go to another one to pick, just to make sure that they fill up. So the same thing is the trade market. When there's an order, and especially like in this place, the big boys, the institution cause this up movement. But then it won't just keep going like that. They know that there are some traders, retail traders, that will be like, for instance, in this place now, they know that the trend is up, but they will be selling. Let's say, for instance, like here now, they will think, oh, the market is going to sell. They sell here and they put their stop loss. That's why you see the market come up here, grab all those, their liquidity, and still finding its way. Now you see what it's doing right here. Now they come here. You see this bullish candle. Let me maximize it. This candle right here. This was prompted by an institution. Okay, maybe there's one heavy position right there that caused that upward this thing. Now some traders or retail traders now will think, oh, we are going up. They buy. Then they put their stop loss. Maybe they put their stop loss. They put their stop losses around here. Maybe they land or they read from a book. Put it few pips below whatever. Then you see what this one did? It came back. Do you see that? It came back to sweep all those stop losses. Now it will start going all this way. So it's just the game that big boys do, the banks do, the institution do against retail traders. And once you understand that concept, you will know that it doesn't matter the strategy you are using, either you are trading, you are using FX sniper, you are using this, you are using whatever, you are using price action. Once you understand that, there is this analogy that I've been saying, and I learned that also, that you see, always wait for A, B, C move. Now you make your money from C to D move. But most of the times we want to jump in to be the one that will start this A and B, and most times it doesn't work because the market can come against us. Now when you see A, B, C, now you have the trend has been defined. Now you see that, okay, your B is taken out here, so now you know, okay, you are an uptrend. And if it is down, is your A is here, your B is here, your C is here. You make your money from C to D. So wait for A to B to C to fall. Okay, so once you can do that, so the reason why I was referring to this is that if this block, okay, is broken, it therefore means that the buyers here cannot sustain it, and there are others here. So it's not really because there are many buyers, it's just because of the fair value gap, and in this particular place, that is what made the size of the box to be bigger. I don't know if I answer your question correctly, but that's my understanding of it.
Yes, you did. Thank you.
So if you go, let's say now, if you go to, let's say 1 hour, like in this case, if I go to 1 hour now, you see that you will not see that big one. Do you see? you will see on 1 hour right now, the sellers are actually in control because you can see the slope is down. The slope is down. Even money flow index, you can see is less than 50. I'm going to close this. I'm going to close this position. It's just crawling. So I have 2 wins. So yesterday we have a winning day. Today we have a winning day. I think we should be taking track of our trades also. So now taking a look at this, even though there is a crossover right here, but when you look at it on 1 hour, you can see that we are still down. Do you see that? It's still down. So the sellers are still in control. Some terminology we say, okay, the supplies are still, so like right here now, if this market breaks this supply block, you see there is a supply, this other block right here. Okay, the sellers are waiting in this place. So if they take control, if they win, the market will push back. But if buyers are able to overtake this particular place and take them out, the next place you will be expecting this market to come will be this particular area. So what you can do, in most cases, you can set, like here now, you can put a sell limit order. Your stop loss, let's say you put a sell limit order here in this place, your stop loss comes few pips above that block. Then you can target maybe like this daily pivot point as your take profit, or even right here as your take profit. Now if that doesn't work out, it might take you out. This will be another place. You put your sell limit order right there. Now remember, on 1 hour, your stop loss has to be above that block. Then also you can still target this particular block. Okay, this block right here, this is a discount block. It therefore means that this place is where buyers are queuing. It's like when you go to auction and they are auctioning cars, you want to buy cheap, you don't want to buy high. So that theory, buy low, sell high, is always in place. Or buy high, sell higher. So you can still buy high. You can buy in this place, it's higher than this place. So you buy higher in this place and you sell over here. So you have to look at, okay, your risk to reward. Can I risk this much to pursue this small one? Okay, and that is why you see the way I set up my chart now is okay. I put this as 15 minutes. I put this as 1 hour. Sometimes I even use it as 4. Okay, I use it as 4. Then I use this one as 1 minute or 5 minutes, depends. Now the rationale behind it is that, okay, I want to do my market analysis. If I do my market analysis right on 4 hours, I still have to go down right here. Okay, I still have to go down to 1 hour. So if I do my analysis on 1 hour, I'm targeting to place my trade on 5 minutes. And if I do my analysis on 15 minutes, I'm looking to place my trade on 1 minute. So instead, I just have something like this so that I can capture, okay, this is 1 hour, this is 15 minutes, and this is 1 minute. So once I have it like that, then just, so the rest is story. I guess I closed that position early, so you can see right there, it's still going up. So if you look here, you see, it's making its way there. But remember, this place is very key. Remember, the analogy is very, very key. Okay? All right, guys. I hope we learned 1 or 2 things apart from trading. Tomorrow, we shall continue. Please, let's take time to do back testing, review, chat. I see some people chatting with me, or we don't understand what we are doing. And that's why we do what we do. It's a lot of work. Trust me. It's not easy to be teaching and trading. It's not easy at all to be teaching and trading. You are being cautious. You don't want to make mistakes. At the same time, you are passing right information. But when we go back and, you know, reverse, and that's why we record at times. We post the recording, watch them. Then when you have questions, whenever we meet like this, the goal is for all of us to be able to do this. So when I'm not available, BJ can lead us. BJ is not available. Great man can lead us. Great man is not available. The Okewo can lead us. Anybody, you know, should be able to just, okay, that is why we call it 30 minutes traders. So we trade together. This is not a webinar. And that is why the group is not 1,000 people. Few people coming together to trade together. Thank you, guys. We'll see you tomorrow.
Thank you.